Hi, and welcome to Lights of the Roundtable. My name is Susanna, and I'm very, very pleased to have Jim Willie back in the show again. Jim, of course, is a data market financial analyst, an expert, and he has predicted many of the market woes that we're seeing today. And by the way, it's Jim's birthday. Happy birthday, Jim. And thank you for
Yeah, I'm
joining us.
41,
There you go.
41 and going strong. And to celebrate, I did not shave, so pardon my rough look, but the brain stem is working fine. Age 41,
There you
here I
go.
go,
And you're
having a
looking
good old
wonderful.
time.
Happy birthday, sir. I bet you have a lot of things planned for this weekend. And I thank you for joining us on your birthday. So tell us, there's so much, Jim, going on. And I saw your interview with Jean-Claude the other day. And there's so much information overflow happening around the world, here in the United States. The markets, we already know that they're imploding, but I'm having the same trouble as you are keeping up with the news because it's exciting. And much of it is exciting, even though we're going to go through some rough times. So I just want to congratulate you on that interview because there's so much going on, especially with the treasuries and where this market is heading to here in the United States.
Let me give you some comparisons. On a regular day a few years ago, my inbox would get about 90 or 100 or 110 items. Now I'm getting 200. I have two or three clients who are like really smart client friends. I call them buddies. Um, and they're sending me 10, 15, 20 things a day. A day. This never happened before. Okay, the other comparison I had is something that's more complimentary and really gives me a lift. I have had more compliments, accolades, like you called this, Jim. This was your forecast 3 years ago. This was your forecast 2 years ago. For instance, I said in 2017 and 18, um, after 0% for so long, if they raise interest rates, they're going to destroy the entire financial markets. So they did a test in 2016 and 17. They harmed things. And now they have no choice. It's not a test. They can't say, well, we're going to do a trial. No, no, no. They must raise rates now for many reasons. And I'll get into that. And I got that right. I said when they raise rates and continue, they're going to destroy the entire financial platforms. Okay. I've had more compliments in the last year than I have the last 10 years. Okay. There's a quickening. This is a really important point. And I don't know if some people 20 years ago, 30 years ago, watched The Highlander. It was a movie, and Adrian Paul made it a television series, but there was a quickening. And the quickening was, look, a lightning against the sword, swordmen, and they'd decapitate the opponent, and the lightning would hit the sword, and he would just, and he'd gain strength. But there's another meaning of quickening, and that's a hastening and acceleration of events. And this is something that I monitored when I was doing my first professional job. It was in quality control. It was Digital Equipment Corporation, otherwise known as DEC, DEC. It was IBM, DEC, and Hewlett Packard, 1, 2, and 3. And that was my first 13 years of work from 80 to 1993. The quickening was important because we would have a statistic. What's the time between events? And if they're more frequent, then you know that it's breaking. And that's the simple lesson. An increase of events means the system's breaking. And that's what we have now. Okay, before we recorded, you were talking about how certain people, friends of friends, friends of colleagues, were unaware of the dollar being in trouble.
Mm-hmm.
And to me, it's perplexing, given that they're intelligent people. but it's very understandable how it happens. It's what they read. It's what they watch. It's what their colleagues talk about. And many of them are not involved in international business matters. So if they're reading the New York Times, catching, the nightly news, even reading the Washington Post, they're not really getting a good slant on the news. Include the Wall Street Journal. They put the best light on well, what's the consumer price index? Oh, it's now announced to be 4.8%. Are you sure it's not 14.8%? Okay. Then they do the unemployment. They say unemployment down, it's 2.2%. Well, the participation rate is 63%, which means 37% are not at work. Are you sure that 2.3 isn't 22.3%? Okay. They're not getting the accurate news. I was telling you a quickie. I had a consult call where the gentleman was very successful in property development, but in California, Arizona, and other points in the West. And he said to me, Jim, the dollar is still strong. And I said, don't be fooled by the dollar index. There's a movement called the BRICS to do non-dollar trade. And also don't forget the second side, non-dollar contract settlement. Like two big corporations and a few suppliers, and they have contracts and they must settle like monthly or quarterly or whatever, depending on the project.
Yeah.
It's not just trade settlement between countries on a net basis. It's contract settlement, and there's no net basis there. It's just pay us. It's like country A and a company, and country B and a company, and then maybe even a third location where the building and construction is going on. Anyway, this gentleman knew about the BRICS, but he said, I don't know much about them. I know it's Russia, Brazil, and China, I think. I said, yeah, and India and South Africa. And I said, are you aware that there are now over 50 members of that union? No, I knew they were growing. I said, their main theme, no dollar trade payment, no dollar contract settlement. And he said, I think I heard that. And I said, the dollar's in trouble. The treasury bond is in trouble. The auctions are in trouble. Foreign central banks are selling treasuries. And now you have the BRICS with quite a large union announcing that trade settlement and contract settlement is not going to involve the dollar anymore. It will involve Chinese Yuan, Russian Ruble, and maybe some of their newer central bank digital currencies. And I said, the dollar's in trouble. And he said something astonishing, Susanna. I mentioned this before. He said, if the BRICS nations don't use the dollar, they're going to be isolated. And I said, well, it's pretty hard to isolate 80% of the global population,
GDP,
and the global economy. And he said, what? And I said, you heard me right. They've got almost 80% of the global GDP and about 82, 83% of the global population. I said, we're going to be isolated.
Yep.
And he went silent. And this was a smart, successful, multimillionaire fellow.
Yeah.
And it's the second time in the last month I've had a similar conversation like that. Americans are not being well informed about the risk to the dollar for its international acceptance.
Correct.
And I'll tell you where rubber will meet the road, Susanna, and people will get it. They will get it. They will comprehend. And that's going to be import supply. How are we going to pay for imports if say Korea, okay, why Korea? I like Korea because it's a really good example. It's not a major Asian or Pacific Rim nation, but it's important. South Korea has three conglomerates. LG, that's for home electronics like televisions. They've got Samsung, which is for cell phones, and they've got Hyundai, which is for cars. And each one is a conglomerate, and each one is far more than just those three items. It'd be like stereo sets, electronics, and maybe some motherboards that they supply to a computer company. Who knows? Okay, Hyundai is a complex, they call them chaebols. In Japan, a conglomerate's called a kuretsu, but in Korea, a conglomerate is called a chaebol. Okay, Hyundai is a lot more than just cars. I think they make motorcycles. I think they make a lot of different things. I think they make engines. Okay, if Korea doesn't want treasury bills, how are we going to bring them in?
Right.
Americans will say the dollar is supreme, the dollar is king. Well, what happens when it's not? And when it's not, would you even notice? Because you read the New York Times, the Wall Street Journal, Washington Post, the LA Times, and those are all rags. Why are they rags? Yeah, once in a while, I'll see a New York Times. I'll see a Wall Street Journal. They're hard to find. And when I do it, I flip the pages and I look to see who the advertisers are. Banks, mutual funds, financial firms. Are they going to tell you the dollar's weak and it's time to invest in something non-dollar? Time to invest in gold and silver? No, those are anathema, curse. Okay, I get a really good pulse, Susanna, from the consult calls. They tell me what people are doing. They tell me what people are afraid of. And right now they're afraid of their bank accounts.
Yeah, many think that they're going to lose.
Or be frozen.
Frozen, exactly. Well, Biden suggested that, if you believe in Biden.
Oh, you know, Biden, Schmeiden. Oh, isn't he funny? Isn't he such a clown? You know, we're getting to the point where everything Biden does and says appears, and just focus on that word, appears, to be to provoke the public into rejecting his regime. We're going to sell the Strategic Petroleum Reserve to China. Okay, anybody see anything wrong with that? We're going to eliminate withdrawals from banks. Anybody see anything wrong with that? We're going to require people to wear their underwear on their outside or on their heads. Anybody see anything wrong with that? We're going to take dog shit from the street and we're going to put chocolate coating on it, and it's going to be recommended by the CDC as antivirus. Anybody see anything wrong with that? Okay, we're getting to the absurd level in the Biden show, and we're also seeing some of their figures, officials, at risk now of being impeached.
Yep.
I'm talking about the FBI director. What's his name?
Ray
Garland.
No,
I get the
are you
FBI.
talking of Frey? You mean Frey? Ray?
Ray, yes, Ray. That's the department. What's the other one? Attorney General. No, shoot. I get the Attorney General and another one confused. It's Garland and Ray. I can't remember what Garland's role. I cannot remember. It's hard to remember because these are cartoon characters.
Not the Federal Reserve.
No. Okay, Ray is the Attorney General, head of the Department of Justice. Garland is something else. I just can't. It doesn't. It's okay. My point is that I'm getting a really good indication of what's concerning people. And they are not yet concerned about getting money out of ATMs. But there might be harsher limits on the ATM dispensation. That's one of my concerns, my personal concerns.
Attorney General Merrick Garland. Sorry, I just wanted to tell you it was Garland.
Okay, Attorney General is Garland. Then what is Ray? W-R-A-Y.
He's the FBI. He is
FBI, that's
the
it.
FBI director, yeah. Right.
FBI. Okay, the FBI is in danger now of losing its funding
Huh. Isn't
because
that
it's
funny?
being identified as a criminal organization.
It's about time. So is the CIA.
Well,
CIA.
but who's going to be doing the prosecuting?
Hmm.
Is the FBI going to prosecute the FBI? Because the FBI is the prosecutor. Are we going to get some judges involved? But the judges are all Obama appointees and Biden appointees. Okay,
Yeah.
we are way
Military.
beyond fixable.
Totally military, I guess. That's where I think.
It's hard because I think maybe 2/3 of the military is dirty and corrupt and taking bribes from Chinese or maybe on narco income bribery.
Yeah, and
NATO
that's
is the narco.
yeah.
NATO is the Narcotics Atlantic Treaty Organization.
Oh, isn't that nice? I love that acronym. That's how you is a
Oh, I'm
narcotics.
full of all kinds of
Oh, I
weird
love
stuff.
that one.
Um,
But it makes sense.
yeah, what I'm focusing on, Susanna, is the
But
breakdown of everything having to do with dollar-based platforms.
yeah.
And we had a phrase, and we actually heard it, and it wasn't meant in. Well, maybe it was. I heard it 3 years ago when this enormous fraud of a pandemic was launched. I heard something called the everything bond bubble.
Hmm.
They're not talking about the mortgage bond bubble like in Lehman '07. They're talking about
Right.
the everything bond bubble. Okay, that's mortgage bonds, corporate bonds, junk bonds, sovereign bonds like the treasuries and euro bonds, the everything bond bubble. Well, what happens to the financial system when you raise interest rates and it's being manifested and impacts the everything bond bubble? Well, that's how you get the everything broken,
Yep.
not bubble, everything broken platform for the dollar.
Yep.
And I'm talking about US government debt, talking about treasury bonds, talking about the dollar itself, talking
Yep.
about trade payment. Like trade payment is often done like in 3 month treasury bill. By the time everything settles, you're almost done with the 3 months. You hold it to maturity and you got cash. Or you
Yep.
can roll it over and do it again and have new options.
Yep.
There are other dollar-based platforms, and they're far more like nitroglycerin. They're the bond derivatives. In Europe, it's the euro bond derivative, euro dollar derivative. And in the United States, it's the bond derivative, otherwise known as the interest rate swap derivative. And, I don't want to get into a lot of the intricacies like the arbitrage of the treasury bond versus an interest rate swap derivative. But that is a very fine and real danger point, and it explains why the hedge funds from Wall Street were invited to participate with the repo window, the bond repurchase window. They had to expand it to the hedge funds because they had so big a volume of treasury bonds involved in their arbitrage with the derivatives of bonds. Oh my gosh. This is interwoven dynamite fuses.
Bomb.
And people think the dollar is safe when in reality, every single dollar platform is in danger of exploding simultaneously. And I got good word back in May of last year that the top 3 Wall Street banks were in the process of bankruptcy. And, I got to explain what that means because people think, oh, you're crazy. Well, of course I'm crazy. I'm a jackass. Susanna, for 15 months, these big American banks have been bankrupt. And the only thing preventing them from announcing their failure is the constant patch jobs from the Fed to make sure that they don't run out of money.
Here, here.
I've got
Finally.
I've got a little formula for people to make it simplified. If you're insolvent, plus you're lacking liquidity, you're then bankrupt. So what is insolvency? That means your assets are not as big as your debts. The debts are too big. So they're playing a game. They're not marking their bond assets to market. They're saying, we're going to hold it at book value, and we're going to hold a maturity, and we're going to hold a maturity value, not their book value. Well, what if 3 years ago they bought a German Bund for minus 10 basis points on the yield, and now it's close to 2%? Well, I got news for you. Down about 30 or 40%. So they're not marking that asset to what its true value is currently. They're saying, well, we got 7 more years on the 10-year Bund, the German bond, call it the Bund, and we're going to hold it to maturity, and we'll call that the value. Well, that's great. That's so nice in a fantasy world, not in a real world.
As long as things go nice.
Because, Susanna, it means they can't lend money.
Yeah.
They're insolvent. Okay,
yeah.
What does illiquid mean? Well, it means we're really short on money flowing in, like mortgage payments, like commercial mortgage payments, like car loan payments, like room addition payment, like a new product line. What do you call it? A credit line for a new product line for a business. We're not getting the cash flow. So we don't have enough money to maintain service on our debts. So if we're insolvent and we're illiquid, we have to declare bankruptcy because we can't operate. Now, that's where the Fed is important. The Fed says, oh, JP Morgan, you're important. Remember the new phrase, systemically important financial institution, SIFI. It's a new acronym. It's in the news for the last couple of years. What it means is, if you're an SIFI important bank, the Fed's going to make sure you don't become illiquid.
Yeah, and so they've been putting patches.
Patches, middle of the night patches. Okay, yeah. This has been going on for 15 months.
Yeah.
Now, here's where it gets dangerous. If you look at the main names, the major names for the bankrupted, failed banks recently, it's Silicon Valley, it's First Republic, it's First Heritage, and there are a few more. I mainly stick in my memory those first 3, but there are a few others. I think US Bank Corp is on the edge. I think another one called Manhattan Bank is on the edge. There are a few more big ones that are on the edge. That means they're really struggling with their liquidity because they're so badly insolvent. They're having trouble continuing operations. Okay, here's where it gets dangerous. For Silicon Valley, First Heritage and First, what's the other one? Republic. The buyer in the acquisition was JP Morgan. And they're in a hidden bankruptcy. So we have a gigantic insolvent bank acquiring large, not super large, but large regional banks. Just think about that. A super giant insolvent bank is acquiring. What are they doing acquiring anything? They should be broken up. Okay, so what they're trying to do, this is where the danger level goes beyond the red needle level. I believe this is what's going on. I believe JP Morgan has been designated the favored super bank. And they're going to try to have 100 more acquisitions by JP Morgan. to be the super insolvent fascist bank that
Wow.
cannot lend, that presides over a failing economy because credit devices and apparatus will not work. And then comes the climax. They will try. This is if they succeed. I don't think they will. If they succeed, they're going to try to get some kind of credit scoring. They could do a CBDC with the Fed coin, and you will not have access to your money unless you're a good doobie and you don't speak out against the government who's trying to kill us, trying to steal from us, trying to bankrupt us, trying to put us out of work, trying to make us sick. You can't speak out. If you do, you can't have access to your money. Okay, here's where I think it's going to break down, Susanna. And, you know, this is all speculation, but I got some decent instincts, so I'm told. And they're the basis of a lot of correct forecasts. I think soon JP Morgan is going to have trouble managing their own books. What books am I talking about? Well, their portfolio of leveraged bonds.
Mhm.
They're going to have trouble with them. The first signal of danger, the first evidence of danger after raising interest rates is you get in trouble with your bond portfolio because your bonds go down. And if you're leveraged, a lot of people don't even know what leverage means. It means you're borrowing money so you can buy more bonds. And that way your bank vice presidents get bigger bonuses. If your bonds are 5-to-1 leveraged, then you only had 20% of the money to buy the bond. The rest was borrowed. And it means whatever return on investment, you got to multiply by 5. So if you're minus 20% on that German Bund, you've lost your entire investment in the Bunds.
Yeah.
Now, I said 5-to-1 for a reason there, Susanna, because the loss for my example would be like 20%. What if it's 30%? Then it's 150% loss. You lost your original investment and half again more.
Yeah.
Here's where it gets really sickening. 5-to-1 is not what they're doing. It's 10 and 20-to-1.
Ridiculous.
Yeah, they're running casinos in the back rooms where you have your life savings, your CDs, your money management, your mortgage, your savings, and maybe more. Okay.
Therefore, that statement, we're going to freeze your assets. You won't be able to retrieve your money from the bank.
Because we need them.
Exactly.
Okay. I said that's the first line of danger and event risk. Here's the second, the bond derivatives.
Lovely.
They're 100-to-1.
Oh, gosh.
And JP Morgan has approximately $300 trillion worth. Now, in 2005, the Bush Bankruptcy Act recategorized, okay, what do they call it? Senior. Okay, the senior debt is the derivative. The junior debt is your bank account. Your bank account is not an asset. It's a loan to JP Morgan. And your credit to the bank is then drawn upon when you do a withdrawal. You're withdrawing from your loan to the bank. Okay, why do I bring that up? Well, if the derivative goes poof and loses $1 trillion 1 week, which is, I think is going to come soon.
Yeah, it's bursting.
There's going to be rumors. Susanna, it's not going to be a news item. It's going to be a rumor. JP Morgan has $1.5 trillion loss on derivatives. And there are rumors that all the bank accounts are going to go to zero because they're junior. They're subordinate. That's the key word. I have trouble remembering that word. Your bank account is a loan, which is subordinate to the derivatives. Okay.
So
So
take your
first
money.
comes
So take your money.
fir-
Sorry, I was.
first get your money out. First
Yes.
comes the danger to the bond portfolios. Then later, if they continue to raise rates, and they are, then comes the $1 trillion derivative accidents. This is not avoidable. Now, a lot of people are wondering, well, I think that as soon as we see positive inflation figures, they're going to lower the interest rates, right? And I said, well, they're not raising interest rates to fight inflation. They're raising interest rates to make sure that the treasury bond auctions are not a failure.
Yep.
Oh, well, I don't know anything about that. My answer to that is, you're right. You don't know anything about that.
Yep.
We're in an environment where a lot of people don't know a lot about what's going on. They're raising rates. Okay, I heard this from a really good financial analyst. He said they're raising rates to fight price inflation problem. Well, the price inflation problem is largely due to supply shortage. So why aren't they encouraging more supply chain production? Okay, everything is wrong.
Yep.
Everything on policy is wrong. All the analysis is humdrum bullcrap. I tell you, there's only one outcome of this. It's more bond derivative accidents. And I think that will stop the JP Morgan acquisition program. Soon we're going to see news like Citibank announced they're acquiring XYZ Bank. Why Citibank? Because JP Morgan's really busy. I read a news item on First Republic. JP Morgan fired 1,000 bank officers from First Republic. So where's the benefit of that acquisition? I tell you,
I don't know.
This is alarming. I've got a really important point that I want to make, and it's switching gears a little bit, Suzanne.
No, go ahead. Go ahead.
With all the treasury bond dumping, it's by foreign central banks. And this fellow that I talked to who thought that the BRICS were going to be isolated, he didn't know that Japan sold $250 billion last year in treasury bonds. They're buying gold.
Yes.
It is. I am learning of some greater complexities in Japan that I will not address at this time, except to say Japanese are the biggest sellers of treasury bonds, and now China is accelerating theirs.
Yeah.
For a long time, they each had 1.0 trillion. That's 1,000 billion. So Japan sold $240 billion worth of treasuries. I've been doing research, which means talking to smart people, reading up, going back and forth on theories. What do you think of this? Would it make any sense? I'm speculating on this. Let me confirm that with somebody who knows that area. And that's where my colleagues come in very handy. When all these central banks sell their treasury bonds, who are they going to sell them to?
The U.S.?
Pardon me?
I don't know. The U.S.? They're dumping it. I don't know.
Did you say the U.S.?
Yeah.
Okay, yeah. Okay. You were speaking gently and softly. I couldn't hear you.
Okay, yeah.
The U.S. Treasury Department.
Yeah.
Send them back home where they came from.
Exactly. They're dumping it.
But it's not that simple. It's really not simple at all. Nothing is simple in this. We've made everything extraordinarily complex, multi-layered, interwoven, and corrupt to the core. If a few countries, I don't want to get real specific. I want to keep this general. If a few countries, some are allies and some are not, they want to sell a bunch of treasury bonds. And I don't mean like 20 million. That's pocket change. 20 million is not a big deal in the, pardon me, hiccup. $20 million, $10 million of treasuries is not a big deal in the daily volume of the US Treasury market. They boast as being one of the most highly liquid, high volume in the world. That is going to be challenged. 10 or 20 million is not a big deal. What if 3 different entities, whether they're central banks or they are pension funds in France or something else, like a sovereign wealth fund in an Arab monarchy? Okay, nobody's talking about sovereign wealth funds anymore. That's so passe.
Yeah.
Okay, what if 3 of them want each to sell 10 billion in treasury bonds? Who's the buyer? They're not even going to do that on the market. The market cannot handle that kind of volume. That would shut down the market for 2 days. So they're not going to do that. This is what I've been researching. This is what I've been trying to get a really good, clean answer on. And one of my colleagues, who I regard as the most expert in this area, said that my rough description and sequence, he said, Jim, it sounds about right. There are a lot of details in there, but I think you got the rough cut on that. What I believe is going to happen is the Fed is going to expand their balance sheet. They'll take it. And remember, they're now the handmaiden to the Department of Treasury.
Yes.
Okay, servant, vassal.
Right.
They're the boy. Jerome Powell is the boy for Janet Yellen at Treasury. So they will take it and put it on the Fed balance sheet. What are they going to give to those 3 countries or entities? They're going to give them their local currency using dollar swaps. Now, here's where it gets almost funny. They're going to print the money to do it.
No way.
What's to stop them? Are you kidding me?
Oh, they couldn't do it anymore.
They'll print 10 billion to give to party A, 10 billion to give to party B, same for party C. And they're going to say, what is your desired currency? We'll use a dollar swap. We're going to print money and export the inflation. It's not going to cause US inflation. That problem is going to be from difficulties with our imports.
Yeah.
We're not going to be able to import from Korea unless Korea makes a deal where they say we will take treasury bills and then we will instantly in 24 hours convert them to our local Korean won with dollar swaps.
All right,
and there'll
Jim.
be no interruption at the port.
All right.
No interruption.
Is that why 21 states, I heard 21 states here in the United States want to be asset backed? They want to create their own market currency.
That's like a revolution against the Fed and the US government. That's a monetary revolution. A monetary revolution.
That's what I heard. I don't know. I haven't done enough research on that. But I was wondering if that's part of it, because we are going to have a commercialization where there's going to, I mean, we won't be able to import, export. I mean, it's going to be on a one-to-one basis.
These nations that supply the United States our imports. I don't want to get balled up with export, import. They're the exporter. We're the importer. They're the supplier. I prefer that.
Yeah, the supplier.
It's Asian suppliers for our U.S. imports. I gave you an example of a nation that will be cooperative. The Koreans would say, okay, we'll take treasury bills, but in 24 hours, we want them swapped out, and we want Korean won in dollar swaps. So that big shipment, it might only be like, oh, I don't know, 2 billion in a big container shipment. 2 billion from Korea. It goes onto the Fed balance sheet. They print the money and they give them yuan with the dollar swap. The Fed balance sheet expands. And here's my zinger. The Fed becomes the US government bad bank. Now, bad bank is an accounting term. If you have an acquisition and you buy a company in trouble and a quarter of their assets are rubbish, not worth anything, you do the acquisition, you make your accounting changes, and you put that rubbish in what's called a bad bank. And nobody wants to buy anything in the bad bank except for maybe, say, 20 cents on the dollar. The Fed is going to become the bad bank.
And that's how we implode everything.
Again.
Oh my gosh.
The Fed is going to become the United States government bad bank. They ballooned their balance sheet from 2.5 to 9 trillion in the last few years. It's going to balloon, I think, up to 15 trillion. Did I say billion? I meant trillion. 2.5 to 9 trillion. I think it's going to go to something like 12 or 15 trillion when these foreign central banks and financial entities like pension funds, like sovereign wealth funds, they dump their treasuries. The Fed as bad bank. And how do they get away with it? Well, there's no law about being bigger and bigger and bigger. There's no law about printing money to cover a foreign sale of treasury bonds. There's no law about to forbid creation of a dollar swap to give them money in their own native currency. We will be exporting monetary inflation. Why did they buy up treasuries in the past? Because they used that to buy oil. I'm bringing up another real big point here, Susanna.
Yeah, the petrodollar.
There's no more petrodollar. The Chinese
in
Saudi made a deal. We'll pay in yuan.
Yep.
The French bought UAE liquefied natural gas, the French, and they paid in Chinese yuan. The countries are not going to finance our debt anymore. Now, remember what I said, insolvent plus lost liquidity equals bankruptcy. This is the bankruptcy of the US government. We're going to have to print money to cover our own deficits. We're going to have to print money to cover the foreign treasury bill sales and treasury bond sales. And we will become a localized Ponzi that is identified as a Ponzi that will have eventually trouble with our imports.
Yeah.
While the BRICS engage in a new vital, I like the word vital, but it has two meanings. It has vitality.
Mm-hmm.
It's going to be functional.
Yeah.
It's going to be valid, vital. It will be sound. And the United States is going to have trouble financing our own deficit. We will be Zimbabwe. I just found out the correct way to pronounce Zimbabwe from a fellow who is making rounds in rather important manner. It's called Zimbabwe. The second B is not a hard B. Zimbabwe.
Zimbabwe.
Anyway, interesting, especially if you're owning Zim dollars.
Yeah.
Like, oh gosh, I got $1 trillion note from Zimbabwe. Don't throw it away. Don't throw it away.
So is the RV happening? I heard that the RV might happen sooner than the implosion is coming up. The RV is going to flick and everything else will come to place. A new system, quantum financial system.
I think there's going to be a lot of simultaneous events.
I think so too. And can I just say one thing? Can I just go back to your story with this gentleman that has not really seen, or a lot of people have not seen how devaluated is our dollar and what kind of agreements are actually happening in the last, and I did a little homework, in just a month or two. Okay, I'm talking. And like you said, France, Macron, besides the gas, they also had a $3 billion deal, or a 3 billion deal, sorry, with just in the shipping sector. And in China, that was another of the deals in China when Macron went there.
For buying a ship? For
No,
shipping goods or buying ships?
No, it has to do with shipping construction. I'm not quite sure, but it was
shipbuilding.
Shipbuilding
Construction.
Mm-hmm.
Okay, French.
They're going to be paid in yuan. So Russia and Bolivia did a trade deal, and they're going to do it in their national currencies. Argentina and China are going to be trading in yuan. Venezuela and Russia are going to be trading in ruble. South Korea and Indonesia. Sorry.
I love that.
South Korea and Indonesia will trade in their respective currencies. Ceylon in rupee with India. Malaysia will trade with India in rupee. Pakistan will buy petroleum in Russia and pay in yuan. Bangladesh will pay Russia in yuan. China and Russia with the Gazprom trade in both. They're going to be trading in both of the respective yuan and ruble. And so the list, and Iran on Thursday publicly announced that it will not trade with dollars anymore. And so anyways, and so there's a lot of little things going on. And when you put that in the perspective, what's happening to the dollar? Where are we going to get our imports and exports? And we're going to see a lot of empty shelves because nobody will want to deal with us in dollars. And that's the whole danger.
If we make it, it'll be on sale on shelves. If we have to import it, it'll be difficult, and it's going to spawn a black market through Mexico and Canada.
Yeah. So
they're giving a new name for Canada. You know, we have a nickname of Canadian as a Canuck.
Mm-hmm. Yeah.
Well, the new name for Canada is Canuckistan because China runs it. Canuckistan. Yeah. Okay. This issue of other countries trading in their local currencies, and when they get confused, they'll just run to the yuan. They'll run to the Chinese yuan, and it's going to be eventually gold backed, whereas ours will not.
Yeah, and well,
here's the implication of that: they won't be interested in financing the U.S. government debt.
Yeah.
Now, there's a very bizarre and dangerous trend that came about in the 70s and 80s. The United States decided that we want constant war. We want a big welfare state. So we're going to run deficits every year, even when we're in economic good times. We must have foreign buyers of our treasury bonds. So let's remove our industrial base so that they have surpluses to buy our bonds. And now that is going to bite us because we don't have adequate industry, and they're not going to be buying our bonds anymore. They're not even going to trade in dollars to have bonds to use.
Yeah.
The writing is on the wall. The treasury bond is trash.
Yeah.
And that means we cannot finance our deficits. That means we have to go the Zimbabwe route and monetize our own debt. And that could result in some severe price inflation. But I think it's going to more likely, you get inflation when you get big change. It's change agent. If they do what they've been doing all along, there's not going to be a huge spurt in price inflation. There's going to be rising prices for imported items that are hard to find. Mm-hmm. And that's where the black market from Mexico and Canada is going to come into play. But the overarching point is foreign nations are not building up their treasury bond assets in their Forex reserves to buy oil, to buy anything. They're going to be buying oil in yuan. Therefore, they're going to try to build up their Forex, foreign exchange reserves in yuan. That's why those South American nations are going to be trading in yuan because the Persian Gulf nations, where they get their oil and gas, will accept the yuan. The lightning rod is the Persian Gulf. They have gone to Petro Yuan. This is really, really important.
Fascinating.
They got the Petro Yuan standard. We've got revolution for the next 2 years in the dollar financial platforms. This is not going to be a 1 month event.
You don't think that just what you described in the last half an hour, 45 minutes of our insolvency won't just make it implode and let it just implode everything. And
it's not going to happen that fast. You have no idea all the devices they have at work.
Wow.
I said a month ago, they're going to increase the ceiling on the government debt. They're doing it now.
Yeah.
They're saying that McCarthy caved in, that they got a 2-year extension on the limit. They're doing exactly what I said they would do. I didn't know all the fine points. They just bought 2 more years. Where's the failure going to be in the next 2 years, Susanna? They just bought 2 more years. Okay, the platforms are breaking, but we're going to monetize our own debt. We're going to print money to cover our debt. And, I got news for you. We've been doing that for a year.
Yeah.
And people didn't notice. That's not a change. Now it's going to become more known. And the image of the dollar is going to be tarnished and trashed. The graffiti around the world is soon going to have on the walls, the dollar is trash. It's not the dollar so much. It's the treasury bond. U.S. government debt is probably going to be downgraded. Very few people are even noticing that there's a downgrade being considered. I'm trying to study the implications of the debt downgrade. It's not going to happen the way a lot of people think. Pension funds and insurance companies are going to be in trouble because of the debt downgrade.
Yeah.
They're going to have to change their bylaws. They can only have investment grade debt. Well, if there's a debt downgrade for the U.S. government, that means a debt downgrade for the U.S. treasuries. That means insurance companies and pension funds can't hold treasuries no more. So they're going to change their bylaws. They're not going to implode. They're going to adapt. They're going to adapt to become more shitty, more insolvent, more rubbish. Okay. If we have a sequence of multi-trillion-dollar bond derivative accidents, we might see the implosion. But I think instead, what we might see is the Wall Street banks shut down and the others do not.
You mean the S&Ps, or are you talking other
banks?
Oh, the banks.
Okay, I'm saying that Wall Street might shut down upon a bond derivative multi-trillion-dollar loss. And the other banks will not, because they don't have that kind of risk.
Mm-hmm.
Some of the bigger banks will, like the 20 biggest that are not Wall Street. They're all at risk. Don't have your money in them. Just because they're a regional doesn't mean they're safe. Get small regional. Here's what I think is going to happen. JP Morgan is going to be in a race to acquire more and more banks. And they're going to make life difficult for them to hasten their failure so that they can buy them up before JP Morgan has their multi-trillion-dollar accident. So that the little banks don't survive.
There we
The
go.
only way we get the full-blown fascist banker state is if JP Morgan has no obstacles for their buying spree in acquisitions. Screw them. I'm hoping for a derivative accident that slows down JP Morgan.
Mm-hmm.
Okay, we've never seen this before. Therefore, there's a lot of speculation. You can't say, well, the last time that happened, it was 1947. We had this bank and that bank, and they were doing. No, there's no such history. We've never seen a global currency reserve implode. We've never seen a downgrade on the global currency reserve. I think they will not downgrade the US government debt. You may not remember this event. It was around 2010. Standard & Poor's downgraded the US government debt. They downgraded the treasury bond. But when Moody's and what's the other one? Fitch considered it, their executives got death threats. So 1 out of 3 had a downgrade. 2 out of 3 in the majority. No big deal, no change in pension fund and insurance company management of what they call the nut, the nucleus investment. I think we're going to get a lot of pressure to kill the executives of the debt rating agencies.
Yeah. Well, there's a lot of things going on.
There are so many moving parts because we've got a gigantic series and network and layers of dollar platforms. I haven't even talked about the petrodollar derivative. I'll give you a quick.
All right.
I'll give you a quick two-liner on that.
All right.
The Biden regime took over with their election fraud and their rubber stamp in the Congress.
Yeah.
With no investigation of fraud. Okay, fine. Was it 1 week later that the Colonial Pipeline was shut down?
Mm-hmm.
Was it 2 weeks later that fracking in the Midwest and Texas basin was shut down? Was it 1 month later that the petroleum reserve was sold to France and China? Okay, these are pro-Rockefeller policies.
Yeah.
We also severed ties with the Saudis. The Saudis became lapdogs of the Russians, leash around the neck. Mohammed bin Salman, MBS, best buddies now with the Kremlin. In other words, he's their boy. The Rockefellers took over energy policy for the Biden show.
Mm-hmm.
And then you had a very funny event that happened a month ago. MBS, let's just say the acting king of Saudi, he did a head fake. He said, we're not going to increase production. We might even cut production. And that was on orders from the Kremlin. So the oil price went up. And the Rockefellers wanted to go down because they're managing things now. And they've got, when we got the oil price got too high, it started to affect the economy. You know, oil-based pricing all through the economy, multi-stage pricing effects. So the Fed and the Biden show want to see inflation come down some so they could lower interest rates. And the Russians gave them a head fake. So the oil price went up. Saudi did not increase production. They didn't do anything. And there are cartoons now saying, it's Salman saying, we fooled them. And Putin says, bitches. We're being played now. We're so vulnerable. Okay. I brought up the Rockefellers, but there's another big point to mention about the Rockefellers. They wanted the oil price to go up some, maybe a bunch, so they can exit the petrodollar derivatives. And that links the dollar to the crude oil. And that's the basis of our dollar standard. You call it a de facto petrodollar standard. We don't have a gold standard. We had an oil standard. Well, now we're losing it. And what's going to replace it? It doesn't operate in a vacuum. What's going to replace the petrodollar standard? The Petro Yuan.
Well, the Petro Yuan on the thing, but the United States has to go somehow, somewhere along the road, as we implode. When we implode and we come back, we'll definitely have to be asset backed by gold, or silver.
No, we may load up on yuan.
Well, I don't as far as the petrol market is concerned, yeah, probably.
Well, yeah, it's the biggest market in the world. It dominates the entire global market. I think the United States is quietly going to acquire yuan. I think we're going to work out a deal with China where we sell them, we sell them treasury bonds and we get yuan, but they're dumping treasury bonds. Okay, there is so much warfare going on.
Yeah.
Let me mention something else about the petrodollar derivative. I think the Rockefellers are busily liquidating them, but there's a third leg on that table. It's precious metals. Gold is involved in the derivatives, and most people don't know where. They figure, well, you got to have something. Yeah, it's in the petrodollar. It's oil, gold, dollar. In fact, there's a little belt on that gold leg. It's silver. It's a gold-silver leg at a 30-to-1 ratio. So when the petrodollar gets liquidated, we're going to move back to 30-to-1 ratio. And if we had a 30-to-1 ratio right now, we'd have $70 silver. So buy silver.
Wow.
Buy silver. My top 3 investment choices are silver, silver, and silver.
There you go.
I have different choices. Okay, remember, the Petro Yuan standard is coming into view. The U.S. government debt default is happening. The Fed is going to become the big bank. These are major, major developments. And global trade, as you cited the numerous examples, global trade in yuan. Now, I ask you a question. It's somewhat rhetorical, but why doesn't Bolivia, Argentina, France, why don't they just move quickly to gold payment?
I don't know.
Because we need a transition. Because we don't want to see a global depression.
That's what it is. Okay. So it is a slow move transitioning. It's a slow move transitioning. So we don't have, it can't be just happening all of at once.
I'll go so far. I'm running out of voice, as you can tell. Golly, my 41-year-old eyes are really failing me. We're going to be moving toward a multipolar financial world. We're going to have dollar. We're going to have Chinese Yuan. We're going to have the ruble. And I'm betting that the fourth is going to be XRP. It'll be a transition item toward the central bank digital currency. Okay, so the dollar will lose its supreme status as the one and only, the one, the major, the big guy on the block. No, sorry, your pectoral muscles are smaller, and what you got below the belt, they're really tiny now. Those little round things are little tiny now. I'm being silly. the multipolar world is going to have another consequence. There will be 10 to 15 countries setting the gold price.
Yeah, I heard that.
I call it the global gold fix. You know, like, I'll just rattle them off. Shanghai, Sydney, Australia, Singapore, Moscow, maybe St. Petersburg, London, Geneva, New York, maybe Rio de Janeiro. Don't know. Got to be something in our southern South American hemisphere. Maybe Mexico City. I don't know. Johannesburg, South Africa.
Yeah.
Maybe some African, like
Zimbabwe.
the capital of Zimbabwe. Don't know.
Yeah.
Okay. And there'll be 10, 15 or more individual prices for gold. If that happens, Susanna, it means the COMEX shuts down.
Woohoo.
Because all those prices will be higher.
That's exciting.
And nobody's going to want to play ball with the COMEX because they don't have any gold.
Exactly.
It's like a big store like Woolworths. We've got an advertised television set sale, but we don't have any. I cannot think of anything more ludicrous. Multipolar trade settlement, dollar, yuan, ruble, XRP, multipolar gold price settlement. Not settlement, fixing. It's going to be exciting.
It is, but I think this is happening pretty soon. It's actually happening behind the doors, I think. I mean, just looking at some of the trade deals they're making, it's just not announced publicly because they're waiting for for us to implode.
The deals are largely with the caretaker yuan. Yeah. The yuan is going to share the stage with the dollar. And the dollar and the yuan is going to be like an axle on the global carriage. And the other axle will have ruble and XRP. And eventually you'll have a third axle of the central bank digital currency. We've got to get this global carriage working for another, I think, 12 to 24 months. And we may see some accidents because there's so much resistance by the corrupt rooms.
Right. The fight's still going. Screaming.
If we can't control it, we'd rather everything be destroyed.
Yeah. Well, that's what I'm hoping. Everything will be destroyed.
No, I don't. I don't want that. I want the Wall Street crowd to reform. Reform or be marginalized. Become a utility.
Consolidation.
Reform and join the community of nations. And you know, the community of nations, the multipolar, it requires something. It requires equality. A nation,
equalitarianism.
What do you call it? Nations equal among other nations.
Yeah.
The United States does not want to be an equal among nations. They want to be the exceptional nation.
Well, exceptional, but says a few. I think we'll end up in the same equal platform. It's just a matter of time.
The exceptional nation has to become a member of equals.
Yeah.
And to be a member of equals, they've got to pull their proper weight. Right now, the exceptional nature of the United States is exceptionally corrupt, exceptionally warlike, and exceptionally insolvent. And those things have to be repaired.
Yeah. Well, with that said, and I agree with you in many ways. And I think that this has been going on for a long time, but we're starting to see just by the information overflow that we get from international articles and newspapers and alternative media and so forth. I think that there is a lot of excitement going on. And I think that the end, I don't know, I have a feeling from other sources that the implosion of the United States economy and the finance might be just fourth quarter would be it. I don't think we'll survive much longer going the way that we're going. But that's, I don't know. That's people, that's everything speculation, like you say.
What if we stockpile yuan in order to maintain our imports?
I don't know. I'm not in the
Yeah.
but
What if they're doing it secretly and they're not telling you about it because they're too ashamed?
yeah,
Remember,
probably.
they're the exceptional nation that must move down and become a nation among equals.
Yeah,
They don't want to do that. When they do it, they're not going to tell you about it.
I agree.
I think
We'll
we're
find
going to
out.
have a transition period where we have a multipolar currency setup for trade payment, contract payment. Look at all the contract payment going on in yuan right now. It's astonishing.
Yeah.
Okay. We're about to go under 50% now for the dollar, under 50% for the US dollar in trade payment. And I think at the same time, we'll be under 50% in Forex reserves. It's been low 60s now for a while. And what I'm hearing is we have an acceleration to get below 50. This is astonishing.
Yeah. Yeah.
We're going to have a transition period.
Yeah. Well,
If we avoid a global depression that's centered in the West, I mean, like the United States taking down Western Europe. We're seeing now Germany on the edge, France on the edge, Italy too.
Yeah.
Italy is converting to the yuan. France is converting to the yuan. Germany is stuck because we will not permit Germany to link up with Russia. We'd rather see them killed. We'd rather kill the German national economy than to see it survive with the Russian handshake. This is really, really dangerous.
Yeah. Especially when they've been receiving oil, Petro. They get their oil from Russia. So there's a lot of things, and they're not having good ties. They're not a happy couple. Not
in secrecy, they're making deals. They're not telling you about it.
Well, they want to be.
They're about to get rid of Schultz, their chancellor, their president. They're about to get rid of him. He's nothing but a Rockefeller stooge.
Yeah,
Rockefeller, Rothschild stooge. Hey, look, I gotta have to go.
Yeah, you do. But this has been very, very great. Jim, happy birthday again. And so much, I really appreciate your time. It's been very educational. And I think people will appreciate very much this podcast because you explain so many things so well. And the reality is that this country needs to implode financially, economically. And I think, like you said, there are trade deals being made behind. And there's so much more to this conversation, but it's your birthday, so I have to let you go. Just before we go, though, I want everybody to please support Jim Willie. He's done a fantastic job over the years. He does a fantastic job explaining everything. And please support him at goldenjackass.com. Goldenjackass.com. I love that name. And you can go to subscribe.
There's a hyphen. Golden Jackass.
Yeah, golden-jackass.com. And I'll have that on visually, and people can go and help him support you, sponsor, subscribe, consult with you. They can just schedule any consulting with you and get more depth of what we're talking about, because it's going to be important what we do from now on with our monies and assets. We need to protect our assets if we want to survive this turmoil. So
we need to protect our life savings. That's one of the major topics for the consult called, Jim, I got my life savings. What do I do? Jim, I've got an IRA. I've got $200,000 in Chase. What do I do? I got a big $180,000 Bank of America account. What do I do? What do I do? What do I do? They want to protect their money, their life savings. What the cabal wants is everybody to go broke.
Yeah. Yep.
And then you've got to work for them, and you get paid a pittance, and you don't get any food to eat if you're disobedient. That's where they want it to go. And we need to have things blow up in their faces as they're executing their plan. And that's what I'm hoping and praying for. All right. Yep. So People go to golden-jackass.com, sign up for the newsletter. If you wish a consult call, I had 3 people recently hit the sponsor button. It's for a nice big gift to keep me going. I honestly, Susanna, sometimes I fall to my knees when I see it. It's just astonishing. Big effect in my life, in my day, my whole demeanor, my attitude.
And you're
Stay on
helping.
after we stop recording. I want to say something.
Definitely. Okay. And I just want to say that you also do support other families. I mean, you have a large extended family. So every little thing that you get is important to Jim, Willie. So I hope everybody does their well.
There was a movie,
goodness. Yeah,
Lawrence of Arabia.
Great movie.
And I'm getting tingles just thinking of it. It's one of the best movies ever made. Forget Ben-Hur. Ben-Hur was great. Lawrence of Arabia. There was a scene where one of the Bedouin chiefs, which means one of the Arab local chiefs, they overran a Turkish train. They captured it, knocked it out, killed everybody. And then afterwards, 50, 80 different Arab soldiers, or whatever you want to call them, they were carting off the booty, like paintings and dishware and clothing and curtains and guns and ammunition. And Arthur Quinn? Shoot. Anyway, the actor's last name is Quinn. I think it's Arthur Quinn. Anthony Quinn. Anthony Quinn is a great actor. He's gone, but he was a great actor in his prime. And Lawrence said to him, "Chief, aren't you going to take something for yourself?" And he said, "I'm a river to my people." I tell you, one of the greatest lines in the history of movies. I don't have much savings. I'm helping a number of people.
You are.
And I think I'm doing God's work. I don't want to get into any debate over right or wrong or smart or stupid or whatever.
You have a good heart, and that's what counts, Jim. That's what
nobody
counts,
in my extended family has missed a meal. No one has missed school. No one has missed rent. No one has been kicked out of a home. And before I get too mushy, I'd like to thank you and stick on the line. I want to mention something to you.
Certainly.
Okay.
Well, thank you, everybody. And you all enjoy the weekend. Thank you very much.